Welcome back to Talk Tickers, everybody.
Always good to be back.
Today, we're going deep on Cleveland Cliffs.
Oh, steel.
Yeah, their Q3 2024 earnings call just dropped.
Nice.
Yeah, you sent us the transcript and the stock info, so you're doing your homework.
Good stuff.
So we're going to unpack Cliffs' performance, their recent Stelco acquisition.
Big news.
Huge.
Yeah.
What it all means for the future of steel in this crazy market.
Sounds good to me.
First things first, this call took place on November 5th, 2024.
Election day.
Election day. And the CEO kicks things off by talking about how Cliff's strategy,
Interesting.
connects directly to the election results.
So like riding that wave?
Yeah, he's emphasizing Cliff's ability to thrive.
Yeah, okay.
No matter who wins the presidency, he highlights the bipartisan support for domestic steel production.
Smart move.
Really savvy, reassuring investors, you know?
Yeah, like saying, hey, regardless of the political landscape, we're in a good spot.
Exactly.
Yeah.
But let's get to the big news. The Stelco acquisition. This was major for Cliffs. And the CEO spends a good chunk of the call explaining why they went all in on this Canadian steel giant.
Yeah, he outlines 4 key advantages
Okay.
to bringing Stelco into the fold.
I'm listening.
Resilience, diversification, synergy,
Okay.
and maintaining Stelco's Canadian identity.
I like it.
Starting with resilience, Stelco is known for having what's called a best-in-class cost structure.
Okay. For those of us who don't speak fluent earnings, what does that actually mean?
It means they're incredibly efficient, so they've likely streamlined their operations, negotiated favorable contracts with suppliers, maybe even invested in automation to reduce labor costs. This all allows them to stay profitable even when steel prices are fluctuating.
So they're built to weather the storm.
Exactly.
Got it. Now, what about diversification? How does Stelco help Cliffs in that department?
So Cliffs has historically relied heavily on contracts with the automotive industry.
Okay.
Stelco brings a different approach with its focus on spot sales.
Spot steel.
Yeah, that means selling a larger portion of their steel at current market prices.
Interesting.
Makes them less vulnerable to the ups and downs of any single sector like the auto industry.
It's like not putting all your eggs in one basket.
Exactly.
Makes sense. But let's talk numbers. What about those synergies the CEO keeps mentioning?
He projects a whopping $120 million in cost synergies
Wow.
within the first year alone.
That's a lot of savings.
That's the power of combining operations, streamlining processes, and leveraging shared resources.
Smart.
Yeah.
But what about our Canadian friends?
Right.
Any concerns about Stelco losing its identity under the Cliffs banner?
Good question, and the CEO addresses that directly. He emphasizes that Stelco retains its name, its structure, its leadership. The Canadian flag will still fly high.
Good.
This acquisition is more about collaboration than absorption.
I like that.
Yeah.
Okay, that's good to hear. Mergers can be tricky, so it's nice to see Cliffs taking that into consideration.
For sure.
But let's get down to the nitty-gritty. How did Cliffs actually perform in Q3?
Well, it's a bit of a mixed bag. They face some headwinds, largely due to weaker steel demand.
And of course, the CEO has some thoughts on why demand is down.
Oh, he certainly does. He blames high interest rates,
Okay.
arguing that they're stifling both consumer and business spending,
Yeah.
especially in sectors that rely heavily on steel, like automotive and construction.
And to be fair, those interest rate hikes have been hitting everyone's wallets pretty hard.
No doubt.
How did this specifically impact Cliffs' bottom line?
So North American automotive build rates in Q3 were the lowest they've been since the semiconductor shortage a few years ago. They only built 3.75 million units during the quarter, significantly lower than initial projections.
Wow, that's a tough break for a company that relies so heavily on the automotive industry.
Exactly. And to make matters worse, demand and pricing also softened in their non-automotive segments, impacting both flat-rolled and plate steel.
So a double whammy for Cliffs.
Yeah.
But they're not called Cliffs for nothing, right?
Yeah.
Did they manage to navigate these choppy waters at all?
They did. They showed some impressive cost control, slashing unit costs by a remarkable $40 per ton.
Really?
That even exceeded their own guidance.
Wait, they cut costs by $40 per ton despite having to slow down production.
Yeah,
That's pretty impressive.
it is. They even temporarily idled one of their blast furnaces in Cleveland to align production with the reduced demand.
Talk about proactive measures. So they're making tough choices, but it seems like they're the right choices. Now, what about their outlook for the future? What reasons for optimism are they seeing?
The CEO points to several factors that could boost demand and drive growth in 2025. The first, and perhaps most significant, is his expectation of falling interest rates.
He's not alone in that hope.
He isn't. Lower interest rates could stimulate spending across the board, benefiting both consumers and businesses.
Yeah, it's like a jumpstart for the whole economy.
Exactly. He also believes the election itself will be a positive catalyst regardless of who wins.
How so?
Well, political certainty, even if it's not the outcome everyone hoped for, can boost confidence and encourage businesses to invest.
Right.
It's about clearing the air after a period of uncertainty.
That makes sense. People need to know what to expect, even if it's not ideal. What else is on the CEO's optimism radar?
He also highlights the shifting dynamics of import economics and the trend towards onshoring. Conditions are becoming less favorable for imported steel, which could give domestic producers like Cliffs a competitive edge.
So a potential boost for American-made steel. I like the sound of that. Anything else?
He's also bullish on the impact of government initiatives like the JPEQES Act and the Inflation Reduction Act, which are designed to incentivize domestic manufacturing and clean energy projects.
Right.
These initiatives are expected to drive demand for steel in key sectors.
So a combination of market forces and government policies potentially creating fertile ground for Cliffs to thrive.
Precisely. And let's not forget about the automotive industry.
Yeah.
While the transition to electric vehicles is a long-term trend, the CEO notes that some car makers are actually slowing down their EV rollout.
Interesting. Why the hesitation?
Well, it's a complex situation, but it seems some manufacturers are facing challenges with EV production, battery costs, and even consumer demand.
So traditional cars might be sticking around longer than we thought, which could be good news for Cliffs in the short to medium term.
Absolutely. Now, the CEO also gave a quick update on some of their strategic growth projects, specifically those in Middletown, Butler, and Weirton.
Those have been generating a lot of buzz.
They have.
Can you give us a quick rundown?
Sure. He assures listeners that all three projects are progressing well. The efficiency projects at Middletown and Butler even received Phase 1 funding approvals from the Department of Energy, so things are moving along nicely.
That's encouraging. What about Weirton? That transformer plant's a big deal, right?
It is. He says that all the necessary equipment for the Weirton plant has been ordered with production slated to begin in late 2025 or early 2026. They've also secured a joint venture partner to bring even more expertise and customer relationships to the table.
Smart move partnerships can be a powerful way to accelerate growth.
Absolutely. And get this, Cliffs will be supplying the electrical steel for these transformers directly from its Butler plant.
That's what we call vertical integration. Control the supply chain. Control your destiny.
Right.
It sounds like a recipe for success.
Mm-hmm.
But before we get too carried away with all this positive news, we need to take a look at the stock performance. You mentioned Cliffs took a bit of a hit after the earnings call.
Unfortunately, yes. The share price dropped by 11.44%, closing at $11.61.
Ouch. That's got to sting for investors who are hoping for a more positive reaction. What's the context for this drop?
Well, this happened within a 52-week range of $10.21 to $22.97, which tells us that Cliff stock has been rather volatile.
So a bit of a roller coaster ride.
Indeed. But remember, the market doesn't always react rationally to earnings reports, especially in the short term.
Very true. So what does all of this mean for investors trying to understand Cliff's performance and its future prospects? What should they take away from all this information?
That's where things get really interesting, and that's what we'll be discussing after a quick break.
Stay tuned, folks, because we're just getting started. We'll be back with more insights from Cleveland Cliffs Q3 earnings call. And trust me, you won't want to miss it.
It's going to be good.
It is. So we've got this mountain of information about Cliffs' performance, their big acquisition, and their outlook. What do you make of it all?
Well, right now, I'm particularly interested in the CEO's comments about interest rates. He seems to be placing a lot of blame on the Fed for the current weakness in steel demand.
It's a bold statement.
It is.
And it raises an important question. How much influence do economic policies really have on the steel industry? If the CEO's right and high interest rates are the main culprit, then a shift in policy could be a game changer.
Yeah, it's not just about steel. It's about understanding the bigger economic picture and how it impacts specific industries.
Investors need to consider those macroeconomic forces, not just a company's individual performance.
Exactly. Now, this is just one CEO's perspective, but it's a valuable insight for anyone looking at the steel industry.
For sure. So bottom line, should investors be bullish or bearish on Cliffs?
That's the million-dollar question, isn't it? They're facing headwinds, but they've also got some exciting tailwinds. And the Stelco acquisition adds a whole new layer of complexity. But here's what I find intriguing. The CEO seems genuinely optimistic about 2025.
He does have this air of confidence, doesn't it?
He does. And remember, he's got skin in the game. His optimism suggests he sees a clear path to profitability even in a challenging market. Remember those strategic growth projects we discussed earlier?
The ones in Middletown, Butler, and Weirton. Absolutely.
If those projects deliver on their potential, they could be a significant growth driver for Cliffs in the coming years.
So we'll have to wait and see. But there's definitely potential for a big payoff down the road. All right, before we wrap things up, I know you've been cooking up a wild trade idea based on all of this. Hit us with it. It's time for...
This is not financial advice.
Okay, let's hear it. What's your outrageous but plausible trade idea for Cleveland Cliffs?
Okay, what if Cliffs, with all its steelmaking expertise, goes all in on the electric vehicle supply chain?
Hold on. They're known for traditional steel, right?
Exactly, and that's the opportunity. Imagine them leveraging their knowledge and capabilities to become a key supplier of specialized steel components for electric vehicles.
I see where you're going with this. It's a bit outside the box, but...
Think about it. Lightweight, high-strength steel for EV chassis, battery casings, even electric motors.
Yeah.
They could become the go-to steel supplier for the EV revolution.
So they'd be riding the wave of the future, not just clinging to the past.
Precisely. It's a risky bet, no doubt. But if they can pull it off, the upside potential is enormous.
Okay, I'm starting to see the vision. It's audacious, but not entirely implausible.
Exactly. And remember, this is just a thought experiment. We're not saying this is going to happen, but it's an interesting scenario to consider.
It definitely gets you thinking. And that's what we're all about here at Talk Tickers, getting you to think critically about the markets and explore different perspectives.
Because the best investment decisions are informed decisions.
Couldn't agree more. So we've reached the end of our deep dive into Cleveland Cliffs Q3 earnings call. Yeah. But before we sign off, what's your main takeaway from all of this? What's the one thing listeners should really remember?
For me, it's the importance of looking beyond the headlines. Yes, the stock took a dip, and yes, the current market is challenging, but Cliffs is making strategic moves, they're controlling costs, and they've got their eyes on the future. I wouldn't count them out just yet.
That's a great point. There's always more to the story than what you see on the surface. And that's why it's so important to do your research, understand the industry, and think critically about the information you're given.
Absolutely. Don't just follow the herd. Do your own deep dive and come to your own conclusions.
Well said. And with that, we'll wrap up this episode of Talk Tickers. Thanks for joining us. And remember, folks, this is not financial advice.
Not even close. But hopefully it's given you some food for thought as you navigate the ever-changing world of investing. Until next time, happy investing, everyone.
So we've covered a lot of ground in this deep dive into Cleveland Cliffs.
We have, but as always, we've only just scratched the surface.
Yeah, we've hit the highlights, the performance, the acquisition, the outlook, even that wild EV idea.
Right, but the real insights, they often lie in those details,
And those details are waiting for you
Exactly.
in the source documents you sent us.
So do yourselves a favor. Take some time to really dig into that earnings call transcript and the stock information.
You might uncover something we missed, a little nugget of knowledge
Oh, yeah.
that helps you make your next move.
Because ultimately knowledge is power, especially in the world of investing.
Absolutely. We encourage you to challenge assumptions, connect the dots, draw your own conclusions.
That's what makes you a better investor.
And if you come up with any wild trade ideas of your own, we'd love to hear them.
Oh, yeah, for sure.
Hit us up on social media or shoot us an email.
Just remember, this is not financial advice.
Never forget that disclaimer.
But seriously, folks, investing is a journey, not a destination.
And the more informed you are, the better equipped you'll be to navigate the ups and downs along the way.
So keep learning, keep exploring, and keep that Talk Ticker spirit alive.
Until next time, happy investing.